Hi guys, welcome back to the Property King. For today's episode, we're going to discuss shadow banking or shadow financing. So what is this shadow banking or what we call the shadow financing? So these are, the institutions, lenders, brokers, companies that tend to lend or do financing for certain buyers of properties or different types of assets that are usually not being regulated by the central bank or other government institutions. Okay, so usually the risks are a little bit higher because they're not as regulated as compared to our banks, which are being regulated heavily by the BSP. So because of this, the risks will be higher. And just to let you know, what happened in the US during the 2008 subprime mortgage crisis that caused a recession in the US, the shadow financing or the shadow banking played a crucial role, in the downtrend of that economy. Okay, because a lot of people, a lot of financial institutions, not just the banks, but of course these informal lenders were giving credit to people who cannot afford to pay the loans or the obligations on a consistent and long-term basis, okay? And because they were not worthy, credit worthy in the first place, it's inevitable that they will default on these loans, okay? So they defaulted, and that caused, a chain reaction in terms of the economy going down. Here in the Philippines, there are actually similar cases of shadow financing. So you could take a look at the micro lenders. I'm sure you've heard of some institutions lending, giving salary loans, okay, or character loans, or you just have to leave your ATM, and then every 15th or 30th of the month, they'll be the ones to withdraw from your account, from your payroll account, to make sure that they get the payment first for the loan that you took from them, right? So this is another example of shadow financing. But in real estate, there are actually developers, or I would say majority of the developers, are now falling into that category of shadow financing. Why? Because they're not really being monitored 100% by central bank. Some developers actually have their own credit investigation. Okay, so they act as if they're banks. So they ask income documents from the buyer to make sure that they will be able, they are financially able to pay the monthly amortization through the developer in what we call the in-house financing. So in-house financing could either be zero interest or with interest. It depends on the developer and the payment term that you chose. So what I want to note here in terms of shadow financing is that as property investors, we need to be careful, especially if there's no credit investigation being done by the developer. Why? Because you may be able to afford the monthly amortization, but when you get to the lump sum or the final balance, you're not sure, if you'll be approved by the bank when you take out the mortgage or the loan from them. Okay, so this is something that you need to bear in mind, and you need to take care of this and make sure that you are really financially capable of being approved, not just in the in-house financing part with the developer, but also through the lump sum. So we'll talk about that in another episode. So that sums up our episode for today. Thank you so much for listening. If you like the content, please smash that like button down below. And don't forget to subscribe to the channel if you're new. Hit that bell icon so you're notified each time we upload a new episode. Follow our social media accounts, Facebook, Instagram, IG, TikTok. We have that. It's all down in the description box below. Also, if you want to book a property consultation with me for free, you just have to send me an email at rk@propertyking.ph. And you can check out our website at www.propertyking.ph. Again, this is RK from Property King. And remember, let's all grow wealthy together. Goodbye.